It appears that equities such as Google and Apple have hit trough levels on their contracts at certain strike prices where it makes it safer for the SMF trader at 11 o'clock a.m. to start going down below the market. And Apple is another stock. It appears that Apple selling has put in its lows. Let's take a look at Apple's lows. 188.17, it's going up. So if we pull back to 189.10 and we're still a dollar higher, we can bid safely at 560, people. You have safe bids and a way to make money now. Okay, so the stocks have gone up. They've come $2 off their highs. They pull back a little bit. Bid Apple 190, call at 5.60. And as I see where the stocks firm up, Goldman is starting to firm up. That's this call right here. Here's the Goldman. It firmed at 685. I said 560 on Apple, okay? So Goldman trend, it too found an area of 170.80, but not nearly as good so far as Apple and Google. But it's okay because, you know, it's a different type of stock. And basically, as we firm up and we want to buy these things, the bids at 560 are safe. Because if we come down and we get hit and the stock is going to hold that underlying support and bounce, we make a profit trading the options off the bottom here now. We've let, and this was a 190 call. Remember, the high was 960. 560, that's $4 below the market. So we're starting to find key areas, whether we get hit today or not, is that we're starting to find key areas that are starting to hold. Meaning that the hardcore selling, which means that all the other intraday bounces, they just bounced, but they rolled over and made lower lows, all the way down. And that we finally hit a place. And it appears that in those equities, to trade those options, it's a place where we can make money in the contract. And that's with Apple coming back down. People are still buying these dips, I can tell you. I can just tell by how they firmed up. If those dips get taken out or not is yet to be determined. All I can tell you is that this is how bottoms set up, and eventually we have been very patient to buy this. So I'm giving a bid on 5 contracts at 560. If I see a change in Apple stock, but Apple doesn't want to roll over. It really it's almost $2 off the low here. It just took a very long time. But look it, we're still down real hardcore here, and here. It's just that each particular equity that we're looking at trading eventually hits its own low independent of the selling here. Eventually. And pretty much we've got quite a haircut here. Whether we buy it today or not is okay with me. What counts to me is that we have the volatility low, and pulling back and setting up is okay for us, in my view, to buy call here at 560. And same thing on this stock here. This is a 540 in the money, or out of the money, because here's a Google one. This one here hit $11 and bounced $2. That's what we're looking for doing here. But in the mix of it all, sometimes it's good to find the actual low of the equity, where the low of the contract is. So people, it's safe to bid this 540 call right now at $11.40. It's a safe bid at this particular point of where the contract closed at $18.50 and it came down $7, And this is what we're looking for intraday. Please let this be your guide going forward. This is what we're going to look for. This is how it's traded. This is how it looks. So if I had 10 contracts at 11.50, I'd be selling here. I wouldn't be waiting around. I'd just be selling. Yeah, you can at 11.50, and as long as Google holds at that kind of trade, well, 10. Be 11, well, let's see, 12.90 be 11.40 on 10, because when they bounce $1, these bounce $2, people. So look, Apple and Goldman's trying to do the same thing. Now, if I start seeing where things don't hold the high, then I'll cancel all. But right now, off of the low, I've got a $3 bounce. It's the first time today that we've had bounces this magnitude at all. Generally, your bounces were shit, less than $1, and they rolled over all day. Well, even though this is still selling off, certain quality stocks have found their independent lows unless there's another big round of selling and fear. So as the fear pulls out and the dip buyer steps in, we start to firm up. And now we're going to get a trading range. And we will have 10 of these. And we will get these. And not only will we get a $2 bounce, we're going to get a $4 bounce. I don't know if that's today. I'm not saying that that's today. But what I am saying, I've got my mind made up. I've got that low end of that contract. I've got the range. I've got the strike. I've got the underlying support on the equity. And once again, as long as the equities hold higher than the previous lows on the pullback, we can do that. So watch the Apple trade, 5.60 here. It's a premium, 15 cents, but so what? It already bounced well over $1, so we get back below here. We still got selling in the market, fine enough. But we pretty much got oversold in the equities, and the contracts are putting in their bottoms at these key level strike prices for now. If things turn more wicked over here and the equities cannot hold $1 above their previous lows, I will cancel the orders. So that means that we're down 242 points. Time, 11:01 a.m. And yes, we took a loss on Google today, but we're more than happy to go ahead and make that trade back. Maybe we don't get it today, but we certainly have the ranges where we can buy it aggressively. And basically, that's this part.